Hello and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for January 30th, 2010. Our website is blog.accendotrader.com, where we put together effective video technical knowledge trading plans on a daily basis. Our trading plan helps us stay focused and disciplined, keeps us abreast of what's coming down the market. That affects our open positions, and as we scan for new trades, we want to see what's happened. We want to check sectors to see where we should be going and where we should be getting out of. But more importantly, it cuts down our research time so we can spend time with our family. The week that was, well, the market once again ended lower for the third consecutive week. Not as bad as the past week, but still, that's 3 weeks down, and as you can see, we're now down for the year. 3 to 5%, depending on your market. And one thing to look at, all sectors were either unchanged, or lower. The sector that took the biggest hit was materials, basic materials. And some of the things that we thought would move the market didn't, and some of the things that we didn't think would have a big impact did. First off, we had Apple earnings on Monday, which were better than expected, but because of it was more due to revenue accounting changes than to actual revenue sales, the market didn't really like what they saw. So we were kind of unchanged for the first couple of days. And then the FOMC policy statement initially had a push down. They decided that once again they're going to keep the rates low for an extended period of time. But what's important to note about that is that one of the Fed chairman, the one for Kansas City, the Fed president for Kansas City, did not vote to keep lower rates. So that could be an indication that the low Fed fund rates could be coming to an end sometime this first half of the year, maybe, because we already have one voting to raise rates. Now, something that hasn't really moved the market too much lately, but did this week, was the jobs claims, because I believe for the second consecutive week, it came in weaker than expected. It came in at 470,000 claims versus 450,000. We also had the S&P with negative commentary about the banking risk with the United Kingdom banking system and how it is going to affect globally. That started Thursday also down on a negative vibe. Then we had better than expected fourth quarter GDP numbers. We came in at 5.7% versus 4.8%. And so Friday did start off strong, but then the dollar rallied off of some hawkish comments from Fed Vice Chairman Cohn. And we know strong dollar equals weaker market, and the market did end lower on Friday. And so overall, as I said, our earnings this week really didn't drive the market. Our economic data did. So what do we have coming up next week, or the first week in February? And you do see we have ADP employment and we have non-farmers. We do have some payroll numbers that could move the market nicely. We don't know which way. We just got to be prepared to trade it. Coming into tomorrow, being Monday, we got personal income spending, construction spending, ISM index, XOM, Humana, Sohu. Sohu's the Chinese version of Google, along with Baidu. And, so none of those are going to have a lot to do. I put XM on there because there's a lot of energy stocks that have earnings this week. Humana, there's a lot of healthcare stocks that have earnings this week. But, I'll be looking at Visa and MasterCard the most, which come out later in the week, Thursday, Wednesday. I do want to point out one new thing that we're going to be doing for 2010. Most of you know that I started off with stocks and options, and even though I'm really focusing as far as investing for myself on futures on a day-to-day basis, I still have several investments in stocks. And so what I'm doing is on Facebook, and my name is Michael Glass. That's where I have all my Accendo Trader stuff as myself, at Michael Glass on Facebook. And they have the Kaching Investing IQ app. And what I'm going to be doing is, if you want to follow me, view my portfolio here, also updates on Twitter for 2010 on what I'm investing, start off with X amount of dollars. And one of the cool things about Kaching is if they have what are called geniuses here, find a genius. You click on that, you find people, you can see how well they're doing for the year, and then you can open an account and have it traded exactly like that genius. It's a pretty cool app, pretty cool website, Kaching. So that's one of the new things we'll be doing for 2010. So for our stock folks, check me out, see what we're investing. And as I said, if you like the strategies, you can open an account and they'll trade it exactly like the genius of your choice. So let's now take a look at the market internals, and we're going to look at the up and down volume. You can kind of see that we had that blase week here. We did have the push down on Thursday, followed up by Friday. As far as the volume and the breadth is concerned, we can see that we really didn't have a lot going on here. These are so-so numbers, but we did have 2 consecutive negative breadth days. The NASDAQ breadth is certainly much more bearish than the NYSE breadth. The other thing to point out is the puts, and we can see that we have close to a 1-to-1 relationship, and we actually did have a 1-to-1 relationship on Friday, which means our option players are buying more puts as time is going further in 2010. So finishing off our look at the internals, and this is our market breadth indicator. 2 things to note here. First of all, it is beginning to give us a buy signal on our push down. So our market breadth internals indicator on a weekly chart is starting to show us we're getting close to our buy range. Now remember, we can go lower, but we're getting close. The other thing to notice, I want you to see on this as we look at the YM, is that our moving average, moving average, is starting to angle down. And so the point is that we had this great uptrend, but we're now we got the sell signal, and we're starting to angle down. So if our moving averages to start swing down, that's showing, again, that sentiment change. Let's look at the ES real quick. And we are seeing the same thing. Now let's take a look at the monthly charts. And we are back to the YM again with our looking at our monthly chart. And what we can see is our March low. Here we are in January. The push is down. And although we haven't gotten a sell signal with the person indicator on the Thinkorswim platform, we are seeing the moving averages starting to level off. And so that is certainly concerning about the overall sentiment of the market. And we'll switch over to the ES on the monthly chart. And we're seeing the same thing. Moving average is starting to go parallel. Now finally with our futures, we can see on our daily chart that we have clearly broken the 50 moving average, but also we can see not only are moving averages not moving parallel, they're down. And we can almost see the blue is the 20 moving average, and the 20 is going to break the 50 if we continue to move lower. And so that is certainly a bearish indicator with the 20 moving below the 50 moving average as far as confirming the trend. Now we are getting a SOAP buy signal, but that's probably not the strongest one. It's not. And what we talked about last week was the support here, the consolidation, and we said that the Dow had broken this consolidation range here. And so we said our next support range that we wanted to look at was this swing high back from October, and that's basically where we're at. Also, with this action here in the beginning of November. So if we were to break this 10,000 level, and that's certainly a psychological number, where's our next target? Again, we're heading down to about 9,700 on the daily chart. Switch over back to the monthly real quick. And we're seeing around 9,300 on a monthly chart, and 9,600 as potential targets on a monthly chart for the Dow. As we switch over to the ES, we see the same thing as far as the moving averages, angling down, getting ready to cross the 50. With the ES, we had not broken the consolidation from November. We did now. And as we see where we are, we basically are messing with the swing highs from September on the daily chart. If we break here, our next target is coming down to about 10,030th. Let's look on the monthly chart and see if we see anything before there. And on the monthly chart, long-term support is at 971, and then we might get a little bit here at 10:30 also, so that matches up with the daily chart. As you can see, we had a futures focus today, so we're out of time. You guys know about our partners. We got a great futures trading room, 10-day trial at $30, a great futures broker with the intraday E-mini as low as $300 and 20 free contracts if you sign up through us. Great charting platform, and we have a futures trading plan to jumpstart your trading with futures. You guys can see all of our links here. As we said before, follow us on Facebook for our stock traders and Twitter to get our alerts. And traders, take on risk. You can lose your money. I will see you next time.